Hi, Assalamualaikum. My name is Nur Fatihah Hayani binti Salmi, and for my part, I will explain about overview of Islamic finance. Islamic finance is actually a finance or banking activities that attach to Sharia, which is Islamic law. There are two basic principles of Islamic banking, which is first is the sharing profit and loss, also the prohibition of collection and payment, the interest by the lender or investor. It also refers to the variety types of investment that are acceptable under this form of law. Islamic banks make a profit via equity involvement, which require a borrower to give the bank a share in their profit rather than paying the interest. Some conventional banks also have sections that provide Islamic banking services to their customers.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Asila. My ID number is PDA 1910011. So today I will talk about benefit of Islamic finance. Firstly is accelerating economic development. Islamic finance companies are certainly focused on profit creation and growth. They tend to invest in promising ventures in order to create long-term profitability and success. This strategy will help their banks attract more deposits and improve their returns in the long run. Secondly is encouraging stability in investment. Islamic finance is typically conducted in a more conservative manner. It is not prone to excessive risk and requires a more thorough analysis before investing. Thirdly is principle of financial justice. Financial justice is a requirement that helps in operation of Islamic finance products during a Sharia compliant way. Islamic finance solutions can perform well if they are based on financial justice. This concept is different from conventional financing, which is conventional financing mainly based on the expectation of profit and the beneficiaries' sole responsibility for any risk.
So this is the continuous of the benefit of Islamic finance. So number 3, the benefit of Islamic finance is it can reduce the impact of dangerous products and services. Sharia law forbid engaging in any deal that support industries or activities that are considered as dangerous, whether to people or to environment. Sharia prohibit financial transactions that relate to interest, speculation, and also gambling. This is the reason why Muslims cannot use most of the conventional financial products and must look instead of the Islamic financial industry. The list of forbidding also include weapons of mass destruction and also cloning and more. The other benefit is fairness in dealing. The law of Sharia strictly prohibit unfair dealing. The basis of Islamic finance is the profit and loss sharing principle. Profit and loss will be split between the bank and also the customer according to the effectiveness of the investment. Partners are forbidden to decide the ratio earlier, and there will be no interest involved. This system will let the wealth to circulate in the whole society instead of just being rotated around the wealthy. The last one is the ethical and moral dimensions. The law of Sharia promote the strong ethical and moral element that encourage good relationship between the parties. The product of Islamic banking also provide ethical values to its user. Islam emphasizes being gentle and honest in a transaction. It has been said that the businessman is the one who is unbiased and peaceful with the other parties and stakeholders, equal with achieving perfect production levels in both private and public sectors. It is important to give out the wealth among the needy and the poor, regardless of their class, religion, culture, and also color.
Hi and Assalamualaikum. My name is Siti Nur Shahida. Today I will talk about the principles in Islamic finance. First is riba. Riba is usury or charging unnecessarily high interest rate. According to Sharia law, riba is forbidden for several reasons. Its purpose is to ensure that the trade is fair and people's wealth is protected. By prohibiting riba, the Sharia law offers opportunities and settings in which people are encouraged to lend money without interest. Second, it is not allowed to invest in business that involve in prohibited activities like pornographic material, prostitution, and adult entertainment because it is considered bring damage to Islam society. There are also some products in food and beverage that is forbidden, for example like pork and alcohol. Muslims can only consume halal foods and beverage. Next, it is illegal to invest in any company or activities that supports the sales, distribution, or use of illegal narcotics.
Assalamualaikum, my name is Muhammad Izam Shah bin Hamzah and I will continue the presentation.
The Arabic word gara is a fairly broad concept that literally means deceit, risk, fraud, uncertainty or hazard that might lead to destruction or loss. Gara in Islam refers to any transaction of probable object whose existence or description are not certain due to lack of information and knowledge of the ultimate outcome of the contract or the nature and quality of the subject matter of it. The rules of Islamic finance ban participation in contract with excessive risk and uncertainty. The term gara measures the legitimacy of risk or uncertainty in investment. Gara is observed with derivative contracts and short selling which are forbidden in Islamic finance. Sharia strictly prohibits any form of speculation or gambling which is called maisir. Thus, Islamic financial institution cannot be involved in contract where the ownership of goods depends on uncertain event in the future. Maisir refer to the easy acquisition of wealth by chance whether or not it deprives the other rights. Because of the prohibition against maisir, certain financial products such as option, future and other derivatives are not generally used in Islamic finance. Ibn al-Qayyim al-Jawziyah opined in unequivocal terms that the maisir which the Quran has identical to gambling as it is commonly understood, consisting of two players who compete with element of loss and gain where the winner gain is profit from the loss of the other.